This is a stock that is trading down about 3% because it's trading ex-dividend today. And we decided to do a deep dive on it. We've got Mika joining to tell you about the key perspective as to why it is declining, what the factors are that are playing out in the stock price right now. Mika?
Thank you for that, Alex. So yes, the stock is trading downwards. It's under pressure the past week, but Vedanta actually made a tweak to its demerger plan, which could be the next trigger for shareholders. Now, they've planned to retain their base metals company within Vedanta Limited, and as the company aims that this scheme will be more favorable for unlocking value for shareholders. And the demerger plan will also help in more an optimal debt allocation. So now the entity will split to 5 separate listed entities versus 6 before. Now, the resultant entities will be the following. One will be Vedanta Limited, which will have Hindustan Zinc, Zinc International, and the copper business at Tuticorin. The second one will be Vedanta Aluminium, which will include the Balco smelters, the alumina refinery, as well as the bauxite mine and some captive coal mines and power plants. Then we have Vedanta Iron and Steel, which will include the company, Vedanta Oil and Gas, which will include the cane oil and gas business. And then we have Vedanta Iron and Steel, which will include the company's iron ore mines in Goa, Karnataka, Liberia, as well as the ESL steel plant. And lastly, it will be Vedanta Power, which will hold the company's merchant power plants, which are owned by the company itself. In terms of how big will Vedanta demerged companies be? Well, Vedanta Limited could have an estimated market cap of 1.02 lakh crores. Then we have Vedanta Aluminium, which could be the highest estimated market cap at 1.1 lakh crores. Vedanta Oil and Gas could have a market cap of around 31,000 crores as per MK, while Iron and Steel could be at 19,200 crores, and Vedanta Power, the lowest at 8,700 crores. It's key to know that Vedanta currently has a market cap of 1.8 lakh crores, and when you aggregate all of this, it goes to 2.7 lakh crores. In terms of benefits, the growth potentials, well, Vedanta is estimated to have a EBITDA CAGR of 16.5% over FY24 to FY27. The aluminium business could have a 25.5% CAGR over the same period. Oil and gas, MK expects this business to generate an EBITDA of over 7,400 crores in FY26, and that for iron and steel, a 3,900 crore EBITDA in FY26. And lastly, Vedanta Power could benefit from strong power demand coming in the next few years, and also solid investor interest. Lastly, benefits for shareholders. Well, investors will get exposure to 5 pure play companies, and they can make their decisions based on the specific commodities rather than having exposure to many commodities. And this leaves the newly formed companies to have a strong case for re-rating. At current valuation, investors are also paying for Vedanta and Vedanta Aluminium alone. So they're getting the rest of the 3 entities largely at no cost as per MK Research. The demerger process is expected to be completed by January of 2025, and shareholders will get 1 share of each of the new companies for every 1 share held for current Vedanta. So an implied potential upside of around 45% for shareholders as per MK just by this demerger.